Hello, it's Stephen Hartman again, your mortgage lender. Today, I want to talk to you about your interest rate. The biggest question we get almost every phone call for the first time we talk to a client is, what is your interest rate? Well, that's a very loaded question and I'm going to break it down for you. So the reason it's hard to give somebody an answer when they say, what is my interest rate? Is my first question is, how much time do you have? Because there are numerous factors that go into that rate. So really for each person, it could be completely different just depending on your situation. So what's some things that we look at for your interest rate? Let's break it down. So first things first, easy one, your credit score. So for your credit score, that's a heavily weighted factor when it comes to your interest rate. Number two, program. The program could completely change the type of rate you're on, whether it's conventional, FHA, VA, USDA, non-QM, so many different options. There's a lot that factors into that, so we have to know the program. Number three, your down payment. Are you putting down 3%, 5%, 10%, 15%, 20%, on and on. We have to know that to really know. Number four, your loan amount. We have to know if it's gonna be a small loan amount, like maybe a $150,000 loan, or maybe a $400,000 loan. That actually can change your pricing depending on the loan tier that you're on in terms of how much you're borrowing. Another reason, now, what about in primary residence versus an investment property versus a second home? All of those factors have different pricing structures. Next up, debt to income ratio. Depending on your debt to income ratio, that can change your interest rate pricing. So if you have a lower ratio, obviously better pricing. Higher ratio can be slightly higher pricing. Believe it or not, a cosigner. A cosigner can actually affect whether or not your interest rate goes up, depending on if you have what's called a non-occupant co-borrower. If you're doing a non-QM loan, which is a non-qualified mortgage, meaning it's like an outside-the-box loan, your pricing can actually be affected whether it's a full doc, meaning we're gonna verify all the normal documents we would, maybe just a profit and loss, which is just your profit and loss from your tax accountant, whether we're using bank statements, whether we're using, no docs, depending on the type of loan. It just really depends, but the type of documentation we have to verify can also affect your pricing. So the key here to take away is, as you can see, you can have numerous things that affect your interest rate. The great news about my company is we have fantastic pricing for the market and we are super aggressive when it comes to trying to win your deal. So you can always count on having a great, highly competitive rate with us. But that pricing can completely depend on your situation. So give us a call. We can figure all that out fairly quickly and get you a pretty close number. But let me know if you have any questions and we'll talk soon. Thank you.